Welcome, 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 and welcome. So basically what I'm going to be doing in this video is an update. I did another breakdown of SPAC like 2 days ago or something. If you want to check that out, it is going to be the pinned comment on the video. I spent like the second half of that video going over the fundamentals, so I'm not really going to do that again because I already did. But the technicals definitely have changed quite a bit, and I want to go over that, especially since the ticker is changing tomorrow, as yesterday the merger vote got approved. I'm going to talk more about the ticker change and my thoughts on that at the end. But before we even get started with what is primarily going to be technical analysis during this video, I just want to throw out a couple disclaimers. First of all, as I said in the previous breakdown, I am a shareholder of SPAC, and I have been for a while, and I will continue to be for Fisker. And the main reason I will continue to be is because I own some in my retirement account, but I also do have call options, and I'm not sure when I'm going to get out of those. Just depends on when the best time is to do so. Aside from that, I also want to bring up a lot of things concerning some backlash. This is going to take like a few minutes, but basically I've been constantly putting out warnings for every single trade setup I've showed, and I'm going to go through this in a second. But if you follow me on Twitter, you can actually get live updates because I post every single day and I put out tweets whenever things change. So when I'm making these videos, obviously as a trader you need to be adaptive and you need to react to the market. So you know, if I can make this video right now, obviously things can change literally tomorrow. So if those things do change, I can't like put out a video during the middle of the day when I'm working. So it'll be on my Twitter. So Twitter is over there at Champion Vibe. Follow me there if you want live updates, because as you can see, especially with SPAC, things change a lot. And then finally, just general warnings. Nothing is ever certain. And I just put a clip together of all the warnings I've given before I even get into all of this technical analysis. Let's get you right with the warnings of trading. So let's head into that. I want to put a big red flag over this. Nothing is ever 100% certain. I always say the highest probability a pattern or a chart can ever have is 85%. And of course this can fail. Anything can fail. So you also want to note that any trades in both the stock market and crypto are at a higher risk right now. Nothing I say here is financial advice. I always say no chart, no matter how good it looks, can ever have more than 85% probability. So that obviously applies here and it applies everywhere. Don't expect anything. No matter how good a trade looks, anything can happen. And that's what we saw with SPAC. You always need to be prepared for the worst, and the best way to do that is a stop loss. Alright, we are back. Hope you enjoyed that little warning clip before we go into all of the technical analysis. Basically, in terms of like the history with SPAC and how I've been posting it on my Twitter, I initially posted a swing trade from $14 to $15.30. That was a 10% swing, and it played out. Then it fell down from $15.30 to $13.50, and it broke a long-term demand line, and I'm going to show that on the screen right now. So after it broke $13.50, I put out a warning, and then I didn't really post too much about it except like a little falling wedge that also got broken out of. And I didn't really post anything after that, which saved people, or not saved people, but it would have saved about 28% of free fall before I was comfortable with posting again, which is when I came out with the original bullish butterfly, which is not what you currently see. This is a new version of the bullish butterfly. So I'm going to show the original one up on your screen. Basically what happened with that was you hit the pattern completion zone and you pretty much immediately bounced 10% the next morning at open, and then you fell back down. And I think a big reason for that was just so many people, or 99% of people, are in a loss on SPAC right now. So during those bounces, or the bounces we have seen, there is going to be some selling because people want to minimize their losses. But with that, the float does change, which is a good thing. We can get more optimistic traders in, especially around the ticker change time. So that is a good thing. And you also had a 948 stop loss on that PCC. Even if you didn't take the 10% profit window, there was literally right after it hit it, there was a 948 stop loss that got hit. on one of the mornings this week, and then it dropped 8% more down to $8.80. So that stop loss also saved you. And then we came out with this new bullish butterfly, which you can currently see on my screen, which I'm going to go over in a second. But what I'm basically trying to get to is SPAC has fallen about 40% since over here. And if you follow me on Twitter, I've been showing how to trade this, and literally if you followed every single thing I just exactly said, the 10% swing trade profit, not being in the 28% loss of after you broke the demand line, the initial 10% after the PCZ, then getting stopped out at 948 with an 8% window to get back in, and the several 5% bounces you had actually off of this PCZ. The whole point of what I'm getting to is if you followed every single one of those things on an asset that is down 40%, you actually would be in profit right now. And currently I'm not even in profit, so I'm not even listening to my own advice. What I'm just trying to convey is that there's always a way to minimize your risk and basically even make profit off of something that's dumping so much, because there's never a straight line down. You get little bounces, and then stop losses can help you from eating up that whole entire way down. And the reason I wanted to bring this up during this video is because there's a bunch of backlash from, quite honestly, people who don't know how to trade and only saw specific pictures I posted. And there was like 3 or 4 people on Twitter that were just saying random things and trying to bring me down and stuff like that. And they were just straight up lying and putting like pictures that made it look bad and stuff like that without using the full context. So please follow me on Twitter if you want live updates. Otherwise, with an asset this risky, you're in a big risk. But I can help you minimize that risk, and I have helped minimize the risk of SPAC on its downfall with my Twitter updates. So that is that whole entire thing. Let's get right into the technical analysis. Starting off with the daily, we have an improved bullish butterfly harmonic with the same targets but a lower PCZ. Basically, I moved the C point from this swing high, which really wasn't the swing high. It was just where you were before you dumped, and I moved the C point from what was originally over here to the left, which was actually the swing high. It was the highest point you had before the dump on the leg up. And then I had to move down the D point to get a 2.618, and that comes out to $9.33. At the same time, this makes this pattern even better, because now from X to D you have a 1.618, which is the perfect golden ratio. The original bullish butterfly did not have that perfect golden ratio from X to D. Now you do with this new PCZ. And I think the first 3 times it hit the PCZ, I don't remember what day it was, but on this new bullish butterfly, I posted it on Twitter again. You need to be following me on Twitter if you want the live updates to really help you out. But I originally posted that 933 and you went up to $10. I even posted, you can see $10 resistance, because that used to be your support. It's where you closed the past 2 days before today. And then you had a gap filter there, so I even posted when it was having a little reflex rally up to $10 that I expect to see resistance. And then you literally went to $10, and as I expected, you fell back down to close at, I think, like $8.96 or something like that, which is the current price on the chart. I don't think it's showing after hours. After hours, it actually did go back up to $9. So you still are in the PCZ. And what I'm trying to get at is it's still valid. You're still in it. The stop loss is not until your all-time low. So your previous all-time low was 870. So the stop loss for this specific trade would be right under 870 or your new all-time low. So, with this bullish butterfly harmonic and what I'm about to show on the 4-hour and 1-hour, it really is go time. You know what I'm saying? It should go right now with the ticker change and just everything coming together at the same time. The technical analysis and the fundamentals playing out at the same time. So it's kind of on life support. You do not want to see it go to a new all-time low. You want 870 to be the all-time low for this bullish butterfly harmonic. And I'm just being straightforward. I'm not gonna say that this is still valid if it breaks the previous all-time low. So your stop loss is down to there for this trade. But yeah, that is a new bullish butterfly harmonic that is improved. And in terms of what can really help this bounce off the PCZ, regardless of the fact that you already had like 3 5% bounces off the PCZ, like the day that I readjusted it, is your 4 hour. This is the best thing. I've been talking about this for so long. In my original breakdown video, I said you really wanted help from the 4 hour chart, and 4 hour classic bullish divergence is the #1 indicator I look for in a trade. And you are really close to getting it. When I originally made my breakdown, you were all the way up here, so you weren't really coming back down towards green, but I said there was a high potential of that happening, and currently you are getting closer and closer to going green again. And when you do go green, you'll have classic bullish divergence. That also kind of aligns with like a downsloping demand line in this downsloping channel, but that's not the best demand line if I'm being honest, so don't think about it too much. I'm just using it for visual purposes. But yeah, I'm really hoping that this can develop into classic bullish divergence, which is a very strong indicator. Plays out, I'd say, 85% of the time, and that can help you bounce off the PCZ of the bullish butterfly. And if you're playing the 4 hour chart, the target for a downsloping supply line is usually a 50% retrace Fibonacci. My grammar was totally off there, but you get the point. And that would line up with your 1355 previous support, and supports can flip into resistances and vice versa. So eventually, if the divergence and the butterfly play out, and you somehow break this supply line with the ticker change and all the other things, the target of a breakout of this would be 1355, and then the stop loss again would be a new all-time low under $8.70. So you're also still oversold on the 4 hour. The most oversold you've ever been was today, so obviously that has a lot of room to the upside, but you want to see it start going back up. But yeah, that's your 4 hour chart. And then finally your 1 hour chart. You're in a descending broadening wedge, which is another bullish pattern. So you have the bullish butterfly on the daily, the downsloping channel on the 4 hour with classic bullish divergence. And then on the 1 hour, you have this descending broadening wedge, which I think has like a 65 to 70% chance of a breakout to the upside rather than the downside. And you also have double classic bullish or triple MACD classic bullish divergence. There's so many terms there, I know, which pretty much means as you've been going down, you created 3 negative momentum islands, and each one, or the last 2, were lower than this one. So this was the smallest one, this was the middle one, and this was the largest one. And as your price is going down, your MACD is going up, which equals classic bullish divergence, and that is confirmed on the 1 hour. The 4 hour is not confirmed yet, but the 1 hour classic bullish divergence is confirmed. And then you have also classic bullish divergence on your RSI, where the price is going down but your RSI is going up. So the 1 hour, my talking and grammar is so weird when I start going, but it's okay. The 1 hour chart looks good. You're obviously well under your 200-day moving average, but that also lines up at 1165, which was your support before the run up to $18 in August. So if you're playing the 1 hour trade, that would be your target 1165. And then obviously the higher time frame chart, the longer it takes to play out. So the 1 hour would be the short term, the 4 hour would be the mid term, and the daily would be the long term. But again, the issue here is it's honestly not a good time to be IPOing right now with the elections literally next week. The stock market is not too great in terms of the general perception. The indexes all have daily hidden bearish divergence. For example, on the S&P 500, you made a higher high on your MACD but a lower high on price, which is hidden bearish divergence on your daily chart, which is the most significant time frame for most traders. Some traders do use the weekly and monthly, and I believe the weekly and monthly also look bad. So yeah, not good for the general stock market with the COVID cases rising and just a bunch of different risks, stimulus, whole lot of things. So it sucks if we have a red day in the market tomorrow. During the same day you have your ticker change, you're at the PCZ of a harmonic, you have a very high likelihood of getting 4 hour classic bullish divergence, descending broadening wedge on your 1 hour, classic bullish divergence on your MACD, and your RSI on the 1 hour. So basically what this chart is implying is the reversal very soon in terms of technical analysis and also the catalyst of the ticker change tomorrow. But again, the major issue is this is probably not going to be saved, or it's probably not going to play out if the stock market continues to fall. So this is really the period where things can change for what will soon to be known as Fisker, or literally tomorrow is going to be known as Fisker. The ticker will change to FSR. So literally everything is lining up for tomorrow and Monday on the technical analysis and the fact that you have the ticker change. But those are the two last days before the general election, so it's literally like the worst timing ever, and that is why there is an increasing risk of this trade. So if somehow the stock market stays afloat and does not continue falling in the next 2 trading days, I think you can see a good rally in price. I don't think you're going to see the targets of the bullish butterfly anytime soon. That can literally take months. But if the stock market holds, I really think you can come up to test like these 5 orange resistance lines in the very near future. You just need the stock market to hold. So yeah, that's the technicals. In terms of a macro technical standpoint, most SPACs or special purpose acquisition companies were running up until their ticker change, and then after their ticker change they dumped like crazy. So if you're playing devil's advocate here, I've been saying a little bit, but you did the opposite. You were running down until your merger. So hey, maybe you could get, this is just kind of some random thought that not only I have, but a few people I've talked to also had, but you're kind of just doing the opposite. You're setting your own trend in terms of this particular SPAC. So yeah, that is the whole entire technicals. I don't want to go for too long. And then in terms of the ticker change, this is what I said on, I think, a past live stream or something. So this is my thoughts on the ticker change overall. Ticker is literally SPAC, but with the Q. And then if you take SPAC and you put a C at the end, it pretty much means a special purpose acquisition company. And we've had a lot of those SPACs this year, and in the last month or two, like 90% of them have dumped like crazy. So now when people hear SPAC, they just run away. And unfortunately, the ticker of this SPAC is literally SPAC. So yeah, I think the ticker change could be good, but we will have to see. It's literally tomorrow. So there's a very low time frame in which that will be proven correct or wrong. But as I also warned you, the stock market does not look good. So we're going to see how this all plays out. I already put the warnings in the beginning of the video, so I don't need to go over that. But what I do want to go over is the actual announcement that Fisker made today about the ticker change being tomorrow, and one thing that I caught on their announcement paper. So let's take a look at that. Okay, so during their announcement, I guess, of the ticker changing tomorrow, they put out this article, and I'm not going to go too into it, but obviously they announced that the ticker will change to FSR tomorrow at some point. But another thing that they mentioned was they currently have 9,000 paid reservations for the Fisker Ocean. Now that car is not even coming out for 2 years, and they're not even technically an IPO'd company yet, because I'm recording this the night before the actual ticker change. But I just did some basic revenue forecasts, and let's go through it. So the starting price of the car is $37,500, or $37,500. Let's say if somehow all 9,000 of those reservees fully paid the car, or fully paid out the car, that would be more than $300 million of revenue. Let's say, because obviously it's not likely that every single one of those people will fully pay the car. Let's just say we're looking at their current revenue, and the reservation price is $250. So you just do 9,000 times 250. They already have over $2 million in just reservation revenue. So I think this just really shows the demand you have when you're not even an IPO'd company yet, and you just started marketing your Fisker Ocean. And then in terms of what I think is great about their business model is they have a subscription plan. Now if one were to do the subscription plan, or for all 9,000 people, where it's a $3,000 down payment, so 9,000 times 3,000, $27 million just off of that revenue. And then let's say every single one of those 9,000 people paid the 1 full year of the $380 monthly fee, which for each person that would be about $4,500 just on the monthly payments per year. Do the multiplication and you get $40 million. So if you add up the down payment and the monthly fees of their subscription service, let's say all 9,000 of these people did a 1 year subscription with the down payment, that would be $68 million. And literally, you're not even technically a fully listed company on the NYSE yet. So who knows how much that can grow until 2022, and especially after the reservations are over and the actual car is out. So that just shows their growth potential and the demand you're already seeing before any major marketing push. And of course, this is all subjective because who knows how many will fully pay it, who knows how many people will do the subscription program, and who knows how long people are going to be paying the monthly fees for. So every single one of those numbers can change and will be changed. I'm just kind of looking at each standpoint from like a one direction variable. If all 9,000 people did the same thing, and then I showed the 4 different outputs of that. So yeah, that pretty much just goes over their revenue. And now let's move on to what actually literally just happened 20 minutes ago. They changed their website right before the ticker change tomorrow, and I think it looks really good. So let's take a look. So here we go. As I've been talking about, their ticker change is tomorrow, and the night before they changed their whole entire website layout. It looks a lot better. It's basically like a scrollable format, and I think it looks even better on a mobile phone, which is probably where most of their website traffic is coming from. And then I'm just going to scroll through really quick. I don't know, I just thought this would be fun to put in the video. Yeah, I mean, you could read that. I'm not going to make this too long, but it looks good, you know. Some pictures up here. And then over here you got like a drone shot, steady shot. I just think like how functional this website is, especially with the press that will be coming in on the merger. You know, there's obviously going to be a lot more traffic coming in soon. When you see a company putting out a website like this on day one, it's just a good look. So pretty impressive. And then obviously there's a bunch of different pages, you can see different things. And yeah, this was the article I've been talking about, in which I found the, where is it, the 9,000 paid reservations, and then they talk about the whole entire ticker change tomorrow. So if you want to find it, I just showed you how to get to the article. But yeah, let's go back to the main video. Alright guys, so basically to end things off, I want to be very clear, you're still at a high risk, being at pretty much the lowest part of the pattern completion zone on the daily. So you really want to reverse soon, and hopefully the general stock market will not dump, because that will probably make this a failed trade, and trades do fail. Personally, in terms of what I've posted on Twitter, about 75% of the trades I make play out, and that's pretty impressive, because if you're making trades that are offering a 9 reward to risk, a 14 reward to risk, where you have that stop loss, those 25% of plays or trades that don't play out, you're losing much less compared to what you're gaining on those 75% of trades. So the biggest thing I can tell you in times like these is manage your risk, and you know, cash is always a position. So if you want to be in cash for the high uncertainty that we will have in the next few months in terms of technicals and fundamentals, that's never a bad idea. The dollar's value is actually going up. As you can see, you broke out on, this is like the dollar index, you broke out on the dollar. That's like the same level, so you kind of had like classic bearish bullish divergence on the dollar. So the dollar is looking good, which means people are pulling out of securities and going back just to cash. So you have to decide what risk you want and what works best for you. I'm just being the middleman of what technical analysis is showing, but there is obviously higher risk at this time just due to the macro. With all that being said, this is the update on SPAC. We will see what happens tomorrow with the ticker change, if the stock market will hold, if the technicals will play out, in which I would say the technicals have about a 70 to 75% chance of playing out. It used to be around 80%, but it's lowered just based on the fact that the market has been pulling back, which I've also been warning everybody about for a long time, not only on Twitter but on my streams. So take caution. Hope you enjoyed the video, and make sure to subscribe and check me out on Twitter. Until next time, peace out.